The Vice Chairman and MD of NIIT now joins in. Mr. Thadani, first up, sir, congratulations on what looks like a bumper quarter, and thanks very much for your time this afternoon. Amongst the many positives has also been that your net debt has come off. Can you take us through, why the operational efficiency this time around could not keep pace with the kind of growth that we have seen on the top line?
Yeah, so I think the top line growth is also backed by a very strong strategic sourcing revenue, and also built into that, I think what you didn't mention is we have added 5 new customers, of which 2 the contracting is over, and 3 more customers, and each one of these customers are global customers of who are leaders in their respective spaces. So those contracts, transition costs would obviously contribute, and that's a good problem to have because these are large contracts. To that extent, I think these will be the 2 contributors to a slightly lower margin, but the 70% growth in EBITDA on a year-on-year basis in the quarter, I think is a decent growth. The second is, so as I said, this quarter has been good because the order intake has been very robust. The revenue growth has been very good. The profit growth has been very good. And I think most important is we've been able to bring the net debt down by a very significant amount. So I think that positions us very strongly for the coming year.
Right, hang in there, Mr. Thadani. We'll come back to you. But as you speak, you've joined us on a good time. The Nifty hits a fresh record high as we speak. It's crossed yesterday's high of 95.17 as well, and it has seen a sharp recovery from the morning lows. At the same time, if you take a look at the stocks which are attributing to the up move, Sumera pointed out HUL, which comes out with its numbers trading at a fresh record high, Tata Motors and Tata Motors DVR. And joining that pack are all the other Tata Group companies as well. Tata Steel has been the stock of the day, of course, currently piling on to some more gains closer to that 9% mark. And Reliance, that one's moved to. ICICI Bank not doing too badly as well, up from the morning lows, up almost 1.5% from the morning lows. That has a fair amount of...
ICICI has been leading actually through the session today. Yeah.
And it has a fair weight on the Bank Nifty as well, so that one's helping its cause. But Mr. Thadani, that's as far as this year is concerned, that you've pared down your debt, you've added a few more new clients. What happens in FY18? Now, you had earlier guided for a revenue growth of 15% in your corporate learning group business. 18% is what you've delivered. Now, with the debt coming off, with you adding new clients, what can we expect in terms of revenue growth and profitability in FY18?
I think we would continue on a similar trajectory. We had guided for 15% and we'd like to exceed that. So I think that's the way we would like to guide for future as well. There will be a focus on margin improvement because I think there is headroom for margin improvement, and that's what we would like to take advantage of. The other is, I think, a significant opportunity in our skills and career space where I think the whole IT industry is presenting a very interesting reskilling opportunity, and we are best positioned to take advantage of that. And it's not only an opportunity, but a responsibility to make sure that the IT workforce gears up for the new, digital age, which is what is at this point of time creating an opportunity for us.
So even on the skills business, it's a smaller portion in terms of contribution to your revenues, but that has seen also quite a bit of improvement. In fact, operationally as well, you all have posted a profit this time around, though small. But what's the internal target on this business? How does this move into FY18?
So, as you know, it's a capacity-driven business, and as soon as you reach the break-even capacity, which is what we would have crossed now, since we have a marginally positive profit, break-even level of capacity utilization, then I think there is a disproportionate improvement in profit as you accelerate your revenues. Second is, I think the last quarter was a little bit of a disappointment coming out of all the worries emerging out of demonetization and the disruption that got caused. I think this quarter our teams have shown that they are resilient and can recover from there and rebound back onto the growth path. So I think there are a number of things built into this. We see a positive year ahead of us.
All right, a couple of things then before we end, Mr. Thadani. First up, you said the focus is on improving margins, and now you also say that the skills and careers business has broken even. So what kind of margins can we expect in FY18?
As I said, the margin will be a sum of individual components, the schools, the skills and careers, as well as
so what would the number be?
The corporate learning. Yeah. I think individually you will have to add them up because they will all move within ranges, but I think the margins will be better than what we had this year.
All right.